Good morning, everyone. Good to see you all today. Welcome to the room. Today is Tuesday, February 1st, 2022. 1 month down in the new year of 2022. 1 month down in Q1. And we are now entering month number 2 here. And the first trading day has put us higher into those pivot ranges up above. And so far we're seeing a little bit of a pullback from those ranges. So one of the things we noted yesterday and that we've tried to talk about heading into the new month is the pivot range relationship. For those of you who have come here recently and discovered our room from my book Secrets of a Pivot Boss, you know, we talk about the pivot range relationships, the value relationships here, and how that pivot range can be paired with the floor pivots. Initially, when the floor pivots were created, it was just the floor pivots S1, S2, R1, R2, in addition to the pivot point. But when I read the book, The Logical Trader, a long while back, I was gifted that book. That book was all about the pivot range. So I combined the two to create that advanced pivot range that you read about in the book. But this range, very, very important. This pivot range, very important. So I've added it to the PivotBoss pivots, and that's our form of doing it. And right now, we've been pushing lower in the previous month here, and you can see that was the pivot range in December. This was the pivot range for January, and it was lower. There's a lower value relationship, but there was a bullish close here. And then price drops. And now here's the pivot range for February. Again, this is the pivot range for last month. And because we closed below it, and because it's lower value, it still has a bearish bias, which means the first push into the pivot range will tend to see selling pressure initially. And that's what we've seen so far. The NQ is pushed right into the pivot range, just above it, and the first push seeing it back off right now. Now that's not to say that it will guaranteed, lead to new lows, but the tendency would be when you push into the pivot range, you will tend to go down there and test that low, which could then be a great rejection opportunity again. And if you don't, instead, if you pull back and start to form, a higher support, that could be an indication that this thing may, the low may already be in. So right now, and we may be looking at a change of bias, up ahead, where it attacks the previous month's midpoint. So the previous month's midpoint is the most important here for the month. And right now, still below that level. The one thing we talked about yesterday that's fantastic is that we got our key ranges. It wasn't pretty. It wasn't pretty. A week or two ago, whenever this happened here, that strong low after this impulsive move, we mentioned, hey, that's a strong enough low right there to suggest that we could bounce back and grab the midpoint. And if we do, we get ourselves a new key range. We quantified this as the largest 8-day range we'd seen in years, if not, in a long, long while. And so that right there could give us a significant key range moving forward if we can get that midpoint. But again, the next day was pretty deep, and it only got deeper here, but the low maintained, and eventually we snapped back to that midpoint, hitting it yesterday. So we have ourselves the key range in the NQ. We have ourselves a key range in the ES, and we're sitting right at the midpoint of each of those right now. Today's low is the midpoint. We got that key range yesterday. Here's a push into the previous month's mid and the pivot range, and so far backing off of it a little bit right now. Again, this is going to be the level to watch right there, because if early in the month here we just start to push and plow through that level, it will suggest that we will start working our way back up, and the level left to test up above is the previous month's high way up here. So this is one of those cases where the previous month's range is so super wide. From here to there. That's got to be one of the largest 1 month ranges in a long while. And we close the month near the midpoint of that range. And it looks like we've already begun the double distribution here and here. So it's basically a B-shaped profile that's in development. And the likelihood of trading back all the way up within the previous range starts with breaking through this mid, but if it can't, then you likely just retrace back to where you traded from. And most recently we went down and we went up within this developing D shape. If it rejects here, we likely go down and then up again off that range. That's why I mentioned before that this key range low will be very, very important, because if we do happen to see some sort of selling pressure that takes us back toward this low, ultimately that could be one of the best buying opportunities of the year, or at the very least of the spring, which could take us back toward value or some other higher levels. So we will see how we begin the month. So far, relatively narrow price action. Look at this range right here, and then compare it to the last 5 days, compare it to the last 10 days, and that range right now is 29% of average, just 40 points of range, and it's been averaging 131 on a 10 and 124 on a 5. So very, very narrow, compressed right now, but with 60-minute buy signals developing. So this is where it could get interesting. Yesterday started the week with taking the previous week's close bid and pushed through the previous week's high. Now we've started with a little bit of weakness and now a little bit of a buy signal here above the previous week's high. As we remain in this uptrend, perhaps this thing tries to make a move again. So, you know, we're seeing quite a bit of strength here, but at the same time, we're still have little boxes that is formed above these ranges. This is last week's major range right there, and we have this little box that's formed above here. So to have a buy signal within a trading range, not my favorite for the ES or the YM. ES looks a little different in that it has pulled back. Sorry, the NQ looks a little different in that it has pulled back, but similar structure here. So, you know, that pivot low is going to be very important later on, because what if price takes it out and now this box here and you rotate all the way back to these lows? You know, you take that out and you rotate all the way back down. Take this out, boom. So we have ourselves some developing market structure here. The short-term trend very bullish overall the last 2 to 3 days, but the overall downtrend still very much intact. So just some things to keep in mind. We also have non-farm payrolls later on this week. So Friday morning, non-farm payrolls 1 hour before the RTH open. That's going to be something that the market's going to be looking to as well. We've already had a slew of economic data that came out here. ISM was the most recent here. Manufacturing PMI a little bit earlier. We have OPEC meetings coming up, and I think it's already happening. So OPEC in play. And speaking of crude oil, a really good call out a little bit earlier by Venu regarding CL. On this strong reaction right at the RTH open, you know, we talk about rejections. A lot of rejection is the reaction you get, and that is clearly a reaction, right? A big sharp drop, big reaction back up, and holds the 87s, and then you see that pivot and this pivot, and he called out the bullish divergence in the 15-minute chart using the oscillator. So that right there, very good call out. You saw the pullback to the zone here that held here, and so far right back to the previous close, and that's about where you want it. Somewhere between here and here is about where you would expect it at the very least, right? You go back to that prior pivot high. If you reject down here, you go boop back to the high. And if you push through there, then again, there's more upside, and it would be tremendously bullish. Right now, we're in a trading range. So here is the previous hour. That lower low coincided with the development of the 60-minute buy signal, which I mentioned a little bit earlier. And so far, that 60-minute buy signal has helped push this thing to the upside off of support, and we're in this range. So in the near term, we may see a little bit higher. We may get somewhere between 88.5 and 89s, but we're kind of in this range. I would say one good flush event, taking out multiple day lows, hitting the monthly pivot range, could be enough to really catapult crude oil much higher. So looking at the daily time frame of crude, higher value relationship right here with the pivot range. This could be a tremendous move coming up. So I really like the crude oil potential here, but we're looking at this pivot range from last month, and then you can see it never even hit it. It took the previous year's close bid and went boom straight ahead, right? Great higher low rejection from this narrow range. Remember, we quantified this narrow range and said if we break down first and find a strong low, we'll have ourselves a very good upside target. And we looked at a 10-point move, and it got there, 66 to 76 and then some. Great move. Another narrow range here we quantified, failed new low, and boom, etc., etc. Now we have the same thing going on again. Look at this right here. Look at that 4-day narrow range, very similar to what we've seen here or here. And all I'm asking for is for price to run some stops down, take out those lows, and find a strong low like this or like this, where it took out some lows out of that small range, and then we start to push higher off of those lows. That could provide a tremendous buy the dip from a swing perspective, and also even from a kind of a month-in perspective, where this thing is just looking to push higher toward the 94 to 96 zone. Based on average monthly range, and let me make sure this is 10 months. Good, it's not. Glad I checked. Based on the 10-month average range, your target would be 95 to 97 half. And right now, that's from the current low of the month, okay? So basically, we're looking at the current low of the month here being, what is this? 86 half. And you got about 97 half up here. So that's 11 points of spread. Now, if you have this narrow range and we break down and say we get down as low as 85, now 85 plus 11 puts you precisely at 96 for an average monthly move that would be in line with our key range target. So again, I do think we have a really good shot. The other thing we talk about is the fact that crude oil and commodities continue to push up in an inflationary period, which this continues to be. And we also see the price likely driving higher into that, perhaps the summer driving season as well down the road. So several factors here that could be in play. But I think this narrow range with the pullback could be a great initial, say, first 2-week trade of the month for crude oil. Last thing I'll do, we can move on from crude here in a moment, is bring up the ADR 4-day range right now. And here's the ADR right here. You can see what is going on. I'm getting Good Lord. Okay. We have that 4-day range. We're quantifying it right here. And 49, basically 50% of average. And if we're going to see expansion or some sort of move to the 125%, we're looking at $6.33. $6.33. Now keep in mind that is on a 4-day range basis. So you're looking at a potential 6-point move over 4 days. Again, if we drop down hard and find 85 as the low, that would be day 1, day 2, day 3, day 4, and you're looking at 85 plus 6. That's a 91 move. So that's what we're looking for, something like that over the course of the next 1 to 5 days. If we can get a flush down and find a strong low like this or something that we can work off of, that could be the pivot low. Add 6 points to it to the upside, and we have ourselves a 4-day, potential to get to that range. So we're talking this into that, this here into that, something like this into that, and pretty soon could be looking at a move from this range. So nice 4-day range, nice compression. Another thing to keep in mind is, look at this right here. How often do we see that? FOMC key level came out last Wednesday, and here we are still trading around that range. Interesting how that's played out. Again, maybe one shakeout and boom, you push through. So that's the crude oil approach here moving forward. At the moment, we have the short-term move higher based off that nice divergence low that Venu called out. We have the potential to go up toward the previous week's high, but not anticipating a breakout just yet. All right, let's see here. Going back to the intraday charts for a moment, pretty choppy, kind of rough up here. We're still trading in a super narrow range for the ES and the NQ. I mean, 29% for the ES, that's pretty narrow. NQ just opened it up a little bit with this drop, but still trading just 40% of average. So we'll see if they can wake up a little bit more beyond that. One of the things I mentioned before that we'll be talking much more about later on is all of the lower value relationships that we're seeing in the market right now. And you're seeing it prevalent as well in some of the cryptocurrencies, like for example Ethereum. Where we've had a very strong move up. This was a good low, kind of closed below that mid, but still was able to bounce back the next day, push through this mid, push through this pivot high, get back above 2,800 for a bit this morning, and it's been a good move. However, this downtrend is still firmly intact. The bearish Pima trigger zone, ever since it came into dominance, has been undefeated, and the lower value relationship continues to be in play. And look at last month. This is the pivot range for last month right there. It just barely went into it for the first 2 days of the month and went boom. Right now we're doing it again, where it's barely coming into that pivot range here, which is from here to here. Do we see another boom cycle here? We'll see how that develops, but again, until proven otherwise, you have to kind of believe that we're trending down still. Although at some point that trending relationship will break. And what we're looking for in that case is some rejection of this low. Whether it's a higher low, like some major higher low that comes into play that says, oh, this thing might be done. It could be a lower low rejection here. Or a confirmed push through the previous month's midpoint here and closing beyond it for the month. That is the decisive factor that ultimately changes the direction moving forward. So a few things to look for, but as of right now, this market, in addition to all the other markets we're looking at right now, have this relationship. Bitcoin, right here. This is Bitcoin last month. This was Bitcoin in December. The difference in December was this was a higher value relationship, overlapping higher, but with a bearish close, a bearish bias. So that was bearish. And as soon as it pushed into it, boom. Over here, boom. Now over here, again, what are we going to do? So that's the one thing here where we're still showing weakness within these broader trends across the board. And we know what to look for in terms of breaking those trends and changing, but right now, still in them. This is the one that's very, the ES, the NQ, this is interesting where we're at right now. If you look at the YM, for example, that's last month's high, last month's low, last month's midpoint, and we close right at it, basically, just below it. But the pivot range is one wide, or one price almost. So are we about to trade in the upper half of last month's range, in the lower half? That's a long spread right there. That's a very long spread. Additionally, you can see 35K has been kind of the line all along. And remember, we had this key range high and low. It came from that high. That was 35K even. And look at how it's been important in this range. We've traded exactly above it to create this part of the profile, exactly below it to trade this part of the profile. And we have ourselves an expanding range that's in play as well. And it kind of goes back to some points we've made before, including JD and others, saying that we may be just range bound up here after a while and just kind of go sideways the rest of this year. A move like this sets the edges for that action. And because January was so big, I mean, it was an engulfing month to the previous quarter's range. That's wild to say. Here's the previous quarter's low, here's the previous quarter's high, and in 1 month it engulfed it. That's pretty wild. But we're right here at the middle, so what do we do now? And that's where it gets very interesting. It almost appears like we're going to have to make a move away from this to either come back in the upper half or the lower half. Because I don't know if we just kind of stay here. It's very interesting. The other thing is we have this key range from this impulsive move here, which is a little different than the previous month's range. I like that, it kind of went up, got that high, and then just got crushed to that low. I like that better than just saying, okay, this move down, up, and down. The impulsive move to me feels better here, although I don't think any of them are wrong. And if you look at next month's pivot, or this month's PivotBoss pivots, they're based on that actual move. So I think that's fine. I'm going to go ahead and mark this one here for the YM as well. I have the others marked. So this is very interesting, the way they've played out. But now we have these key ranges, which are going to help tremendously. And the goal here is to be patient and allow the market to push into those zones that are favorable here. And then we have great reliable targets down the road. The high here is 36,390. and the low is 33,031, and the midpoint was reached almost very quickly, and then it was reached yesterday at 34,711. There we go. So that's the key range right there. Okay. And we'll discuss even more as the day goes along, and especially in the afternoon monthly market outlook. So we have that upcoming here later on this afternoon, 4 o'clock p.m. Central Time. We'll talk futures, stocks, cryptocurrencies. We'll talk about these key ranges and what it could mean for the rest of the quarter. We're discussing that now, but we'll go into more detail as well. But here, remember, just by having this key range and that impulsive move, we now have reliable targets at the extremes here. That tells us that 39,750 could be the next upside target on a longer term basis, and that puts us basically at 40K, which is the 50% extension on the yearly pivots. It's R50, not bad. So 39,750 to 40K. Can we get there by the end of the year? Where's the downside target? What if we go down first? Well, look at the downside target. The 100% puts you right at the yearly low, the previous year's low. And that does it from the previous year's midpoint. So when we come to, if we were to come down here and test this key range low, it will also be a test at the midpoint. So if there's a failure there, it's a failure at the mid, and you fulfill the 100%. So it's lining up very, very nicely right now. There are those circumstances where you get the nice impulsive move, you fail to the 100% target, and then you start to work your way ultimately to the 100% upside target. Bitcoin famously did it. When the futures came out for Bitcoin a while back, the initial impulsive move pointed down to, 30-something hundred or whatever it was on the downside. It hit it, and then it eventually rallied and hit the upside target as well. So it can certainly be done. Again, not sure that we get that move all the way to here, so it's going to be interesting how we play out, but at least we have the blueprint in play. Yeah, the blueprint is there, and all we got to do is just allow the market to go into these zones and do what we do. So watching to see how this behaves, but very interesting here, that price action recently. Again, one of the biggest 8-day moves we've seen in a while. Now we have ourselves our key range with yesterday's hitting of the midpoints. Good stuff there. RTY has an impulsive move as well that I can mark. So right now we're seeing, I don't want to get overly bearish here, but this little retest right now, very interesting. Rejection at the high, and the overnight pivot, a drop, and a retest here at the previous close. Starting to show a little bit of weakness here. The early key levels that I mentioned before was 14.8 and 44.70, 44.75. You start to break down through there, and that will open it up. So they're teetering on the brink here of a bit more of a pullback toward the previous week's high price. Still kind of choppy price action at the moment. Okay, let's take a look at RTY. So we talk about the yearly pivots and the quarterly pivots and how rare it is to see a test at the quarterly low or at the previous year's low, especially in a very bullish market. This is one of those times where it hit the year's low, the previous year's low. Mostly range bound, so easier to get that previous year's low, kind of like Amazon where it was the same thing and it kind of got that low. You could see immediately previous close, and this is what we're talking about right now in the market. So let's take a look at this a little deeper here. If you look at how the ES, the NQ, and the YM all closed near the midpoints of their ranges. This is kind of the previous year's high, previous year's low, and then you have the close here, and the midpoint of the year is there. So, you know, not quite as on top of what we're seeing now, but close, where they're right there. And almost immediately the close is offered, and then the midpoint's offered, and that stretches this to the edge. And that's kind of what we're talking about is, you know, we're either going to trade in the upper distribution or the lower distribution with a quick move. And that's what can tend to happen, but you're mostly range bound still. You have that above, you have this below, and the first tests at the previous low rejected pretty good here over the last week. And now what happens? You know, do we come down here and reject this low? Do we get a higher low here? But if it can reject these lows, then ultimately you're trying to make it back to 2190, which is the previous year's midpoint, and back to the close, which brings you back to break even. So not bad. So previous year's low, very important. Now, is there greater distribution to come though? Because here's the move where we failed, and now we've broken that market structure after major distribution perhaps up here, and we failed. Lower value relationship. This is where, okay, do we keep on going? How bad is the next rotation going to be for some of these? So we have key ranges in play. This one is not as easy either. It's not as clear cut. I don't know if we have one here. I thought we did, but for example, there's that impulsive move. There's your low, and it don't think it got it there. I think it fell shy, and then it got a lower low, and you know that's not usually where you want to be. So I guess this one hasn't really given us a good one here on that leg. All right, I'll keep hunting on that one. Look at Dutch Brothers here. Brought it up on this day here as it was bouncing off 40 with an outside day, and here we are above 58 this morning. 58.5 is the high. That's quite a move already. In this one, nice little expanding price action here. You can see it's gone from value low and approaching value high. You know, this one could be another one that continues to trade around here, but very good move initially, up 10% again today. Tremendous strength there. Roblox here. Roblox had a little bit of a pullback and is now sitting up here, kind of in this little bit of a fade after trend day mode. Again, hitting the Pima trigger zone in a downtrend, and in the prove it mode with the lower value relationship here. You know, if you push into this pivot range or into this Pima trigger zone, there can be another round of weakness. I mentioned yesterday that there's a put spread there that I'd enter. I did get in this morning. And there's two ways to go here. I probably could have done it a couple of ways. Kind of an at the money deal where you're 65, 70 and selling that call spread. I ended up doing a 60, 65 for 240 something, and it is out 40 something days. So just in case this thing drops here on one rotation and drops below 60, I'll be able to collect a bit on that premium there. And if it does not, then I'm holding on here, and we'll see how that goes before I let it go here. But it's sitting right in this zone here where, again, there's the potential to see another rotation down up ahead, just like everything else we're talking about right now. So I did get that spread on. If we look at, what is it, Nvidia here. Nvidia's down today. That's coin. 1%. You know, again, this is another one that we talked about as a really good one, especially if you get it on a pullback. It hit below the 200-day average, and that's been very, very bullish in terms of getting price back up. Still a lower value relationship and still on a downward trend. Still below previous market structure. So, you know, again, do we get one more good pullback here? Does that lead us to a strong higher low and go? Because that midpoint is going to be very good. As soon as you can get above the midpoint there, it's also coinciding with market structure, and it kind of gives you the next zone above the test, somewhere between 300 and 310. So watching this one here, a little bit of a pullback after yesterday's strength. Does that linger and become more weakness into the close below the previous day's mid? Or do we start to bounce into a checkmark trend day fashion here for some of these? Right now, again, the fact that the 60-minute chart still show these markets are above the previous week's highs still shows that these are still strong, relatively speaking. Not crude oil, I mean it's doing its thing sideways. But these are previous week's high prices across the board, and we're still above them, still holding for now. But should they give out, that's where some major rotation could come into play. Yeah, here's Netflix, by the way. Look at that move right now. This was on the list Friday that we talked about with regards to narrow ranges. So, you know, you take your cues from the market. If the market's in a narrow range, 5-day narrow range as it was last week, then there's probably a ton of stocks that doing similar. We quantified that and said that there could be a pretty good move to come. Let's look at that again on a 5-day basis. I have it on a 4 right now. Okay, there we go. Look at that move and look at that. I mean, that is a solid move right there on a 2-day basis. You see down here, compression right there, and at the time we noted, you know, this could be 100 and whatever points here. Just call it 100, and we're already pushing at 80 something points on this move. And again, that's taking it from the 5-day low, but we still have the potential to go even farther here. So tremendous move. We're coming into the pivot range from below. Good breakout. And this is what I talked about before, is that when you have a range like this, you know, sometimes you might have an idea of directional conviction, sometimes you may not. But when price opens out of range and value, that's almost the market telling you right there what's happening. And so this gap up, this gap out of that 5-day range, and the little pullback that held, I mean, that's enough to tell you that this is about to be a unidirectional trending move. And now you're seeing a continuation out of that range. So a solid move here to the upside. Big time move. That's awesome. Roku up a little bit here today. All of these coming into those lower value relationships. This one's interesting because you have the previous year's low here, and the previous year's midpoint is right there. So as soon as it can recover both of those, this downtrend likely is done. and we start to work our way maybe back up some degree. How far, how fast, who knows? Again, some of the other stuff way up here is probably way out there, but you might be able to get a 250, 260 because it's in line with market structure here, which is not bad. I mean, considering we just came off the 140 level, a 280 to the key level is a double there. So, you know, again, some of these are getting to a spot where maybe we're getting closer than not, but we still have those relationships to work off of, which are currently showing weakness, bearishness. Open door up a little bit today. 2 days running here of open door as well, up 6%. That thing running off the $8 level. Interesting. We just finished the hour, and we have buy signals that developed across the board. I hesitate to be too bullish on a buy signal that develops inside of a range. So, you know, here's the range, and then, you know, you just got a signal within the range. Same thing here. So again, not the best to get a buy signal like that within the range. It could be a function of just the back and forth action within that range. The NQ looks a little better because it kind of did auction downward a bit. It hit value, so did this one, and bounced. So it looks a little different, but you know, still not the strongest here. Still have an upward bias over the last couple of days, but watching those pivot lows over the last hour. I mean, next hour, if we close through these midpoints, that could be indicative of what's to come this afternoon. So very eager to see how we finish the first trading day of the new month, because it could be telling for the rest of the month. It wouldn't surprise me also just to kind of go sideways, build a range heading into the NFP report, and then seeing a rip of energy one way or another. Very narrow ranges right now. Just flipping through a few lists right now. You know, it's going to be interesting how, again, we got these weekly charts that are showing great pullbacks to begin the month of January. We got the monthly charts, you know, that are showing the tendency to bounce back after a huge month down. Can we get a shakeout first? That's funny. Yeah. 6/10 off from the target. 1780 right there, and that was about it. You're right. That was close, but not close enough. Almost on the spot. Actually, I guess I should have been more precise. I just kind of, you know, called it 1780. The last low was 1781.30, and it took it out. I actually just was looking for something a little bit higher than this, or around that, actually, 1780. This one, you know, been a great one as well, but we're in a compressing environment right now, and you know, this 1850 to 1780 is probably it for right now, and then something will happen out of that range soon. This recent move right here is actually pretty good in that it was an impulsive move down. You know, when Dwayne called it out earlier, you know, here, it was just off of a fresh higher high failure, and now starting to get that impulsive sell-off to this low, which is a good strong low, and now we're bouncing back up. So as soon as we get the midpoint of that range, we have our new key range. The midpoint is right there. It's that level right there. Perhaps we test it tomorrow, and then that's the new key range. We don't really have to mark it because the pivot's there. Basically mark it for us right now. But that's the key range to watch. Moving forward, if we can get that midpoint. So based off of that key range, so again, remember, we have this as the range, that as the mid. On the way down, 25, 50, 75, 100% target there. And that is 1708 or so. Something like that. No. Where's my, there, it says my pointer. Yeah, 1707 as a downside target. The upside target puts you all the way up here to 1928 or so, and we haven't been above 1900 in a good while. Last time was here, and it was dump time. So again, that kind of further suggests that, okay, based off just this little impulsive move here, we have to about here that could be in play to the downside, maybe as high as here to the upside, and that's about as high as we got last time. So that's a good little key range to work off of. We obviously have the larger key ranges that I've been using. This is the most recent with the flash crash low, and so far that one's been significant there. The failure here and the likelihood of going to get that midpoint in most cases from that failure. We saw it here, get it there. We saw the failure here, get it here, and now here. Can we get that mid and drop into that level? Kind of a twofer. So we'll see. I mean, this has been interesting the way this has played out, but clearly compression across the board. Look at the bands. Whenever this one's ready to go, this one will be very active and could be multiple months of trending price action, which could be great for some of these trades as well. Still showing a little bit of strength here. ES back above the previous session's high. Oh yeah. You know, UPS, I know you all mentioned that one earlier. That one with the gap is tremendous. You have this 359 versus a 310. This is tremendous movement in one fell swoop. I mean, you were literally closed yesterday at the 200 day, and now you're over 2 standard deviations away from value. So that's incredible there in one fell swoop. And when you compare it to IYT, you see the gap in kind, and that shows you again how much UPS has weight in IYT to influence it that way. You know, there's a website I use for the longest time. It's a simple website, but it's bar chart, barchart.com, and it's really good about typing in a symbol like IYT, and very quickly you can see everything, all the stats related to it, and in a moment's notice you get the top 10 holdings. And the top 10 holdings are Union Pacific at 19% holdings, and then you have UPS at 17.5%. So 17.5% of IYT is UPS, 19 is Union Pacific. And after that, you have CSX, which is 9%. Right there, 9%. And then after that, it goes down to under 5% for FedEx, 5%, you know, that's 4.8% for FedEx, 4.5% for Norfolk. Uber is 4.5, 4.35. Old Dominion, Southwest Airlines, Delta, all those are under 4%. So this one makes up the bulk along with Union Pacific. And look at the gap up, tremendous move there. The other thing I like about this, again, yearly pivots are so great to begin the year, but you have the high and close so close to each other. The midpoint's way down here, and then the low is, you know, this much down. So when you reject this zone so quickly, you have a high confidence factor that you're likely going to get down here and grab that target at some point. This is the difficulty in the market, is sometimes you get so close to it right here and it turns out being a tremendous day, and that's where everyone's like, oh man, I guess it's not going to get there, so I'm going to go ahead and get in early, and then woof, there comes the woof and it gets it. And then it goes, you know. So sometimes it can be tough to time that, but most times, look at that, it's going to grab that midpoint, and the reaction was right off of that level. Previous lows way down here. Not sure we get anything in there, but we'll see. Great move. Thanks for bringing that up. Huge gap in UPS. We talked about BITO and how it could be used as a good Bitcoin proxy. Dwayne put up some pictures there. The graph showing the relative movement, and they seem to follow quite nicely. This is going to be another one here that if we start to see right here, you know, a change against that pivot relationship, that might be the indication that this one is done going down for now, and we could be headed higher. As of right now, the relationship stands. We could see another move down, or this thing could just drive through that mid and start to go higher. If it closes, say, back here, this pivot range would come up to here, and then you pull back, and now we're working back up the range. So right now, to get this one started when everything was very expensive, and now to see it kind of create market structure, create value at those highs, and then now push way down, just based off this, who's holding and what's going on here. I mean, a 21 back to 40 half, that's a good way to get in. If you get a little bit lower, 20 to 40 could be in play for this one, just playing it off that chart alone. So downtrending right now, but trying to keep abreast of this one here, because it could be very useful, especially for those of you who'd rather be in on this because of again, you're not having to create any extra accounts or do anything extra. You can just be using what you're currently using. So good stuff there. Right now, closing the hour with the buy signal within the range, and now seeing a push toward the top end of those ranges. We'll see how these finish up a little bit later. We're going to be back on the mic later on this afternoon And then we have the monthly outlook later on. So again, if you didn't see the link, I'll post it again later on in the day, but we'll have that monthly outlook to look forward to, a lot of great key ranges and a lot of stocks and charts to look at. So that's going to be a lot of fun. As always, if you can't make it, I will have it recorded. But if you can't make it, or even if you will make it and you want me to check out a certain list of stocks, or you have certain stocks you want me to check out, please put those in the chat and I'll get to those. All right, everyone, have a fantastic rest of your morning, and I'll see you later on this afternoon. Take care.